Good afternoon, members. A very warm welcome to the next technical session. We are thrilled to see such enthusiastic participation today. To formally commence, I have distinct pleasure to request our chairman, Manjunath Hemallur, to escort our eminent speaker on the dais and present a traditional flower bouquet as a token of heartfelt welcome and appreciation. Now it's my privilege, I, Chandraprakashin, Managing Committee Member, Bangalore Branch, introduce the speaker of this session. CA Sudheendra B R is a practicing advocate specializing in income tax laws with expertise spanning international taxation, consultation, and litigation. He has represented clients across various forums, including income tax authorities, income tax appellate tribunal, and High Court of Karnataka. He is an active academic contributor and serves as a faculty at our institute, ICAI. Bangalore branch, in addition to teaching at several other institutions. As part of ICAI's e-learning initiatives, he has contributed lectures on profits and gains for CA's final students. His authorship includes Provision Towards Warranty Charges, Allowability under Income Tax Act, published in 298 ITR Journal 1. Carry forward and set off of MAT credit under Section 115 JAA. Allowability in the hands of amalgamated company, a case study. Published in October 2009, BCAJ, which received the PM Trivedi Prize for its best article, awarded by BCAS. He has spoken at numerous professional seminars and is part of a team involved in revising Sampath Iyengar's commentary on Income Tax Act, 13th edition, a respected publication in the field. With a short introduction, without further time, I hand over the floor to our speaker. Sir, this is your.
Good afternoon to learned members, senior professionals, and my dear friends. At the outset, I would like to thank the Bangalore branch of ICAI for giving me this opportunity to discuss the definitions part of the Income Tax Act. As you are all aware, the Income Tax Act of 2025 have rationalized various provisions. The main motto of the Income Tax Act of 2025 is to simplify the provisions of law. With the same aim, the definitions chapter of the Income Tax Act also has undergone substantial changes, wherein the definition was contained in various provisions of the Act of 1961 Act. Now these provisions have been moved to the definitions, most of the definitions have been moved to the definitions part of the Income Tax Act. The main motto is to simplify. With that objective, we will begin the discussion on the definitions under the Income Tax Act of 2025 and its implications. The definitions chapter of the Income Tax Act is closely connected with our profession. Why? Anybody? What is the first definition of the Income Tax Act of 2025? The word accountant carries the same meaning as defined in section 517. So the first definition of the 2025 Act defines us the chartered accountants. So in this way, it is closely connected with our profession. Earlier, the 1961 Act had defined the advance tax as the first definition, whereas now the first definition is the accountant. Otherwise, there is no change between the definition of accountant as defined in the 1961 Act and the 2025 Act. But we have to be very proud of ourselves saying that we have been defined under the Income Tax Act of 2025 at the first place. With that, we will begin the discussion, actual core discussion. The definition of assessment had contained in 1961 Act. Section 2, subsection 8 of the 1961 Act had defined assessment in an inclusive manner to say assessment includes reassessment, that's all. Now, under the 1961 Act, various provisions had also said that recomputation is also a part of the assessment mechanism. For example, section 154 for rectification of mistake apparent from record, section 147 dealing with reassessment, section 155 dealing with specific amendments to the total income on account of various happenings, various events which takes place after the assessment order is passed. These provisions had contemplated recomputation also as a part of the assessment. But nevertheless, section 2 subsection 8 of the 1961 Act had not included this recomputation part. So to make the things clear, to clarify the intent of law, now they have amended, now they have introduced the not amendment, the definition of assessment in section 2 subsection 13. It says that assessment includes reassessment as well as recomputation. This is one difference between the 1961 Act and the 2025 Act. We will mainly focus on the differences between the 1961 Act and the 2025 Act and those changes, what is the purpose of these changes. Now, coming to the second, what is the purpose? This is to enhance clarity and to remove the ambiguity, this definition, that is assessment includes reassessment and the recomputation. So that, because the decisions, otherwise there is no exhaustive definition of the word assessment. Various decisions, including Supreme Court and High Court, had clarified that what do you mean by assessment? Whether assessment is a stage after filing the return, whether assessment is a stage which starts with the issue of notice under section 143 subsection 2, at what stage the assessment starts? Assessment was understood, the word assessment was defined to mean a very comprehensive term, very wide term, starting from the stage of filing return of income itself. Because section 140 capital A of the 1961 Act talks about self-assessment. You have to assess your own total income and you have to declare your taxable income in the return of income. So the process of assessment starts from the desk of the SSC or from the desk of the chartered accountant who prepares the total income of the SSC. The courts have also held the same. The process of assessment starts with commencement of the filing of the return of income and ends with what stage. There also it is very wide term because some courts have held that CAT appeals is a continuation of the assessment proceedings. CAT appeals has coterminous powers with that of the assessing officer. So the word assessment doesn't stop at the stage of assessment, it goes beyond assessments. So the same meaning has been introduced into the Income Tax Act of 2025 to mean that assessment includes the reassessment as well as recomputation of the total income. Any recomputation of the total income will also be regarded as an assessment procedure under the 2025 Act. The next important aspect is, as you all know, the definition of previous year, the definition of assessment year has been done away with under the 2025 Act because they have introduced the concept of tax year. They have defined the term tax year also in section 3 of the 2025 Act. To mean that tax year means a period of 12 months commencing on 1st April of the financial year. The word financial year is not defined as such. Financial year term is used in various provisions of the 2025 Act. So it's the concept of assessment year and the previous year has been done away with, and now it has been replaced with the tax year, a period of 12 months. The Income Tax Act of 2025 starts from 1/4/2026 onwards. So 26-27, 1st April 2026 to 31st March 2027 is the tax year. The income of the tax year will be liable for tax. That is the major amendment done, the shift of the concept of the assessment year and the previous year has been done away with, and the concept of tax year has been brought into the Income Tax Act of 2025. One small change is that in the 1961 Act, Section 2, subsection, a particular subsection had defined the term assistant director. There was also a definition of assistant commissioner. There were two definitions under the 1961 Act. Now, the definition of assistant commissioner said that assistant commissioner includes a person who is appointed to be a deputy commissioner also. As we all know, ACAT and DCAT or have similar functions in nature. Their functions, their roles and responsibilities are one and the same. In terms of hierarchy, DCAT may be higher than the ACAT. But leaving that aside as such, the functions, roles and responsibilities were one and the same for the assistant commissioner as well as the deputy commissioner. Similarly, the assistant director and deputy director are also one and the same. But however, the 1961 Act said that assistant director means to be a person who is appointed as an assistant director only. It had not included the deputy director, a classic case of casus omissus. Now that has been rectified in the 2025 Act to say that now the assistant director also includes the deputy director. Otherwise, there is nothing changed. Assistant director includes the deputy director. Coming to the aspect of books of account, Section 2, subsection 12A of the 1961 Act defines the term books of account. What do you mean by books of account? Ledger, cash books, day book, all those things are regarded as books of account. It also said that whether taken as a printout or whether maintained in electronic system or whether maintained in digital form. Now, the 2025 Act goes one step further and also includes that these books of accounts can be maintained on a cloud storage platform like Google Drive or whatever cloud storage platform. It can be maintained on the cloud storage platforms. The books of accounts can be in electronic form, it can be in digital form, it can be maintained in the server, it can be maintained in the cloud storage platform. It can also be maintained in the portable data storage devices. Portable data storage devices can be anything like external hard drives, memory cards. This is mainly to catch up with the latest technological advancements wherein the books of accounts can be maintained not inside the organization but somewhere in the cloud space. To catch up with the technological advancements, this amendment of the books of account, the entire definition of the books of account has been replaced in the 2025 Act. Charitable purpose definition, Section 2, subsection 15 of the 1961 Act defines what do you mean by charitable purpose. What purposes are regarded as charitable purposes? Medical relief, relief of poor. Lastly, advancement of any other object of general public utility. There was a proviso below Section 2, subsection 15 to say that any other activity of advancement of any other object of general public utility shall not be regarded as a charitable purpose, provided it is carried on in the nature of business commerce, it is carried on in the nature of trade, commerce or business, by charging consideration fee by whatever name called, irrespective of the usage of the consideration, irrespective of whether it has been completely used for the purpose of general public utility, unless it also carried out an exception. Unless the activity of general public utility should have been carried on in the course of carrying on of the object of general public utility, and the receipts from the object of general public utility should not cross more than 20% of the total receipts of the charitable organization. This was the existing definition of the charitable purpose and under Section 2, subsection 15 of the Income Tax Act of 1961. Now, this proviso to Section 2, subsection 15, which was there below, has been omitted in the 2025 Act. Now, the definition of charitable purpose as per Section 2, subsection 23 of the 2025 Act does not include the proviso at all. It only enlists what are regarded as charitable purpose: relief of poor, medical relief, education, protection of environment, preservation of environment or wildlife. Lastly, any other object of general public utility. The proviso, the essence of the proviso, the complete proviso has been shifted to Section 346 of the Income Tax Act. Suresh sir would have dealt with this aspect in detail. I would not go into that. I would only like to highlight that the definition of charitable purpose has undergone a change from 1961 Act to 2025 Act. Now, under Section 346 of the Income Tax of 2025, same concept has been embedded. What does it say? A recognized non-profit organization shall not carry on any commercial activities in the nature of the object of general public utility. Same conditions, provided the 20% criteria is also the same. One additional condition which is there in the 2025 Act is that if at all the recognized non-profit organization carries on any other object of general public utility, and if it charges any consideration, it has to maintain separate books of accounts for that particular category. Now, anyway, charitable trust is required to maintain books of account under Section 347 of the Act of 2025. The moment its gross receipts exceeds the maximum amount not chargeable to tax, it is compulsory for the charitable trust to maintain the books of account. Now, when it comes to the object of general public utility, there is a further requirement that it has to maintain separate books of account for that particular objectives, which was not there in the 1961 Act. This is one important distinction between this 1961 Act and the 2025 Act, which I need to highlight. Coming to the cooperative societies, the word cooperative society was defined in the 1961 Act to mean any cooperative society registered either under the central law or under the state law. Union territories were not included, which was unintended. Therefore, the 2025 Act says that the societies, charitable banks or societies which are registered under the Union Territory law is also a cooperative society. Is also a cooperative society under the 2025 law. Section 2, subsection 24 of the 1961 Act is a definition of the word income. It is an inclusive definition of the word income. Income includes so and so. It refers to various provisions of section 28, section 56, section 22, wherein that particular category of income which is included in various heads of income is regarded as income. It is an incorporation by reference under section 2, subsection 24. What happened under section 28, subclause 3C, 3D, 3E? Profits from transfer of DEPB license, profits from transfer of certain import entitlements were regarded as business income. But however, these incomes were not incorporated into the definition of the income under section 2, subsection 24. Again, an unintended one. But nevertheless, the tribunal, various courts and tribunal, the special bench decision of in the case of Mumbai, in the case of Top Man Exports, says that merely because these incomes are not reflecting in section 2, subsection 24, you cannot seek to exclude that from the taxable income, because the definition of the word income is an inclusive manner, is defined inclusively. So thereby, whether or not there is a particular income which is referred, which is there in section 28, but which is not there in section 2, subsection 24. Merely because it is not there, you cannot say that it is not an income at all. The courts went on to say that these are necessarily the trading receipts, these are necessarily the income arising from the carrying on of business or profession, which is liable to tax. Now, this unintended omission has been rectified in the 2025 Act. Now, the definition of income in section 2, subsection 24 also includes this reference to the business income, that is the profits from transfer of the DEPB book, duty entitlement pass book, profits from transfer of the certain import entitlements. These are also included in the definition of the term income under section 2, subsection 49 of the 2025 Act. The word relative has been defined at least 4 places in 1961 Act. Section 2, subsection 41 of the 1961 Act defines relative. Relative means husband, wife, brother, sister, any lineal ascendant or descendant of the individual. When it comes to section 13, relating to charitable trust, relative had a definition. Section 40, capital A, subsection 2, relative, in the case of business or profession, there was a separate definition. Section 56 to 7 has a definition, which is a wide definition of the term relative. So, there were at least 4 definitions under the 1961 Act. Now, the courts had held that each definition will apply for its own purpose. Section 2, subsection 41 ka definition, it says it is default, it is a definition by default, it is applicable for all purposes. 48(2)(b) definition will be applicable only for interpreting section 48(2)(b), only under 48(2)(b) to find out the payments made to relative persons. You cannot borrow the definition as per section 2, subsection 41. Similarly, when you receive something as gift from a person, whether that person is a relative or not, you cannot see section 2, subsection 41. You have to see the definition of relative as per section 56 to 7, read with 56 to 10. Now, in the definition of the relative under the 2025 Act, section 2, it defines the term, section 2, subsection 94 defines the term relative. The only change made in that particular definition is that it says relative means husband, wife, brother, sister, or any lineal ascendant within brackets, either from maternal side as well as from paternal side. So this has been clarified. Earlier, the law was silent as to whether if you are a whether in case if you receive a gift from mother's grandmother, let us say mother's mother or mother's grandmother, in case if you receive a gift, the law was silent as to whether the lineal ascendant from maternal side would also constitute a relative under the law. It was silent. But nevertheless, the courts had said that irrespective of what happens under the Hindu succession law, irrespective of whether these people constitute a succession line under the Hindu law, you will be regarded as a lineal ascendant or descendant from the maternal side also. In case if you receive a gift from mother's mother or from mother's grandmother or from mother's great-grandmother, you may not be entitled to their estate under the Hindu succession law. But nevertheless, under the Income Tax Act, for the purposes of section 56(2)(10), 56(2)(7) read with, under the corresponding provisions of the Income Tax Act of 2025, that is 92 subsection 5 is similar to section 56(2)(10). 92 subsection 5 defines the definition of the word relative. So there are two things. One, the definition which is contained in section 2 subsection 94, which is the general definition under the 2025 Act. It says that lineal ascendant or descendant can be either from maternal or from paternal side. Similar thing is also defined in section 92 subsection 5, which is corresponding to section 56(2)(10) of the Act of 2025. Under both the places, under both the definitions, a lineal ascendant or descendant can be from either from paternal side or from maternal side. Earlier, which was silent, now has been clarified, it is a welcome definition because the scope of the relatives gets extended. So whenever you receive a gift from a relative which is included within the definition, that is going to be exempt under the provisions of the law. Section 8 of the Income Tax Act of 1961 had clarified the year of taxability of the dividend income. Section 8 of the Income Tax Act of 1961. It said that whenever it comes to final dividend, in the year in which the dividend is declared, distributed or paid, in that year, this dividend income is going to be taxed. In the year, in respect of interim dividend, the law said that, section 8 said that whenever interim dividend is unconditionally made available to the shareholders by virtue of a board resolution, it is at that point of time, it is the year of taxability of the dividend income arises. Now coming to the definition of dividend, section 2, subsection 22 of the 1961 Act defines, wherein there were 6 clauses A to F. The last one, F, is the buyback of shares, which was introduced very recently. Now, in section 8 of the 1961 Act, it had not made a reference to section 2, subsection 22, clause F, again by omission, inadvertently. They only said that dividend means the dividend as defined in section 2, subsection 22, clause A to E. It stopped at that stage, even though clause F was introduced subsequently. Now, the 2025 Act has included this in section 7. Section 7 of the 2025 Act very clearly categorically says that whatever is the dividend as defined in section 2, subsection 40, clause A to F, similar to 222, A to F. Now, section 2, subsection 40, clause A to F, this is the meaning of the dividend. This is the meaning of the word dividend as used in section 2, as used in the section 7 of the 2025 Act. And the principle remains the same. There is no change in the principle of the year of taxability of the dividend income. The final dividend is going to be taxed in the year in which it is distributed, declared or paid, and the interim dividend is going to be taxed in the year in which it is unconditionally made available to the shareholder. This is the only change, which was an omission under the 1961 Act, has been cued in the 2025 Act. Coming to the place of effective management, how do you find out the residential status of a company? A company is resident of India provided its place of effective management is in India. What do you mean by place of effective management is also defined in the explanation to section 6, subsection 2 of the 1961 Act. It said that place of effective management means a place where the key management and commercial decisions that are necessary for the conduct of the business of an entity as a whole, which are in substance are made. Now, the law is talking about the residential status of a company, whereas while defining the poem, it had used the word entity, which is broader than the company. Entity can be a proprietorship entity, partnership entity, or a LLP, it can be anything. So there was a mismatch between the definition of the poem and the residential status of the entity, that is the company. Now this has been sorted out in the 2025 Act to say that poem means same thing, that is key, where the place where the key management and commercial decisions that are necessary for the conduct of the business of a company as a whole. The word entity has been replaced with the company, which is a more appropriate word in the 2025 Act. Otherwise, entity was meaning, could be interpreted as a beyond the company also, which was not making any sense. When we are talking about the residential status of a company, we should talk about the place where the effective management and commercial decisions for the company, for the business of the company as a whole are taken, or in substance are taken. This has been sorted out in the 2025 Act. Section 9 of the 1961 Act defines the term business connection. Any income from business connection, directly or indirectly, through or from a business connection in India is taxable in India. Any income, directly or indirectly, through or from a business connection, through or from a asset in India is taxable in India. Through or from a source of income in India is taxable in India. The fourth limb was transfer of a capital asset situated in India. So here, they had not used the word from. It only said that, section 9, subsection 1 said that, any income arising directly or indirectly from a transfer of a capital asset situated in India, through the transfer of a capital asset situated in India is taxable. Whereas all the preceding limbs, it had included the word through or from a business connection in India, through or from an asset in India, through or from a source of income in India. Whereas the last limb only said that any income arising from transfer of a capital asset situated in India. Now this has been sorted out. This has been now included in the definition of the business connection as through or from a transfer of a capital asset situated in India. Anyway, it does not make any change, drastic change, because the word through is also separately defined in Section 9 of the 1961 Act, as well as Section 9(2)(d) of the Act of 2025. The word through means by reason of, in consequence of. So there are three, the word through has been interpreted to mean very wide in nature under the 2025 Act. The word from means source, out of, through or from a capital asset transferred in India. So it talks about the source, it talks about out of. If any income arises out of the transfer of a capital asset situated in India, then it becomes chargeable to tax. It is regarded as income deemed to accrue or arise in India. So the word from takes care of this, which was anyway included in the word through, because the word through is also separately defined as by reason of, by in consequence of, or by reason of, like that. It does not make any change. Law has only clarified, has made it abundantly very clear, in line with the earlier propositions. Now coming to the definition of royalty under the 1961 Act. The word royalty, because income arising from royalty paid by a resident of India is deemed to accrue or arise in India under Section 916. What do you mean by a royalty? The royalty was defined in explanation 2 to Section 916. It had 6 separate limbs. The first limb and the fifth limb talk about the transfer of all or any rights, including granting of a license in respect of patent, design, model, secret formula, or in respect of any copyright, etc. Transfer of all or any rights. That means there has to be transfer of the rights in the copyright. There has to be transfer of the rights in the license, including the grant of a license. Means the license has to be granted in respect of the copyright itself, in respect of the patent, invention, model, design, etc. The Supreme Court, in the case of Engineering Analysis Excellence Center Private Limited, said that in the context of the treaties, it said that unless and until there is a transfer of the copyright itself, whatever is the amount paid for use of the computer software will not be regarded as royalty. When you are using a computer software, you are using only a copyrighted product. So the Supreme Court accepted the difference between copyright itself and the copyrighted product or the copyrighted software, which is coming out of the OECD commentary. Supreme Court applied that distinction and said that in the context of the non-resident payment, whenever a payment is made to a non-resident for taking a computer software on license, you are not being given any copyright in it. The copyright remains with the original holder, original owner of the computer software. You are only given a license. License of what? Anyway, it is not a license in the copyright also. You are not given any license in the copyright also. What you are given a license to use the copyrighted software. Therefore, the payment made for this particular thing will not be regarded as royalty, Supreme Court said. Supreme Court also considered the expansive definition of the under the Income Tax Act of 1961, because explanation 4 to section 916 had clarified that when it comes to transfer of all or any rights in a copyright, it also includes transfer of the right to use computer software. Explanation 4 had said this. Supreme Court noted this explanation 4 and said that our conclusion will be applicable under the treaty only. Under the domestic law, the Supreme Court decision may not be applicable. Now, under the 2025 Act, what does it say? Same definition is included. Along with the words transfer of all or any rights, they have also included the word grant of. Now, in the 2025 Act, what does it now says? It says that transfer or grant of all or any rights in respect of patent, invention, model, design, secret, formula, etc., etc. Similarly, under clause 5, it says transfer or grant of any rights in respect of copyright, etc. The word grant of has been introduced in the 2025 Act along with the word transfer. So the legislative intention is very clear. There need not be absolute transfer of the copyright. Even a grant of the copyright, even a grant of the rights in respect of patent, invention, model, design, secret, formula, etc. would also be regarded as royalty. So this introduction of the words grant of appears to be to explain very clearly the position under the Act of 2025 to overrule the decision of the Supreme Court in the case of Engineering Analysis Center of Excellence Private Limited. In any case, these words have been introduced into the 2025 Act. As you all know, the DTAA overrides the Act. So when it comes to non-resident payment of computer software, the law, as explained by the Supreme Court in the case of Engineering Center of Excellence, Engineering Analysis of Center of Excellence, would hold good still under the 2025 Act. To that extent, there will be no change. But when you make payment to domestic parties within India, let us say you buy a Tally license or you buy whatever the computer software and you are making payment to a vendor in India, then the decision of the Supreme Court will not be applicable. The existing definition, the explanation 2 read with explanation 4 of 1961 Act itself clarified that a computer software, whenever you use a computer software, whatever rights which you have got, that is amount to royalty. Now the 2025 Act goes one step further and says that there need not be transfer of all or any rights, even a grant of a rights. The granting of rights for use of the computer software would also be regarded as a royalty under the 2025 Act. So there is a distinction between resident payment and non-resident payment when it comes to the definition of the term royalty. When it comes to the resident payment, 2025 Act goes one step further and also includes the word grant. Whereas when it comes to non-resident payment, you can always rely on the treaty definition, provided the non-resident has to furnish the tax residency certificate and the e-filed Form 10F, then only the doors to the treaty will be opened, as you all know. Unless and until the non-resident furnishes these documents, then the treaty will not be applicable. In such case, we have to fall back on the provisions of the domestic law and you should start deducting the TDS. Section 90 of the Income Tax Act of 1961 is a door to enter the treaties. It says that the provisions of the Act, Income Tax Act, are beneficial, will be applicable provided they are beneficial than the provisions of the treaty. So Supreme Court in Azadi Bachao Andolan and various other decisions has categorically held that the provisions of the treaty would override the provisions of the income tax law. Now, when it comes to the treaty, there will be certain expressions, there will be certain terms which are defined in generally in Article 3 or Article 2. Now, what happens if a particular term, expression is not defined in the treaty? How to construe, how to interpret this particular term which is not defined in the treaty? Now, the domestic law had made some amendments and said that if a particular decision is, if a particular term is not defined in the treaty, I am going to define that. For example, the word process. The process is a term which is included in the definition of royalty and generally under all the treaties. It says that wherever any consideration is paid for the use of a process, it amounts to royalty. What is process was not defined in the treaty. Now, explanation 3, 4, 5 or 2, section 916 defined the term process and said that process means this. Again, a confusion arose, again a dispute arises as to can you apply the definition of process under the Income Tax Act of 1961 when you understand the term process in the context of the treaty. The decision said no. Because according to these decisions, according to various tribunal and in fact the Delhi High Court decision in the case of Asia Satellite, it said that it has to be a term which is not defined in the treaty. The word process is not a term at all. That means it is a term which is within the definition of the term royalty. It is not a main term, it is a sub-term. So even if the term process had been defined in the 1961 Act, the courts had said that you cannot unilaterally apply this particular definition while understanding the word process into the treaty. Thereafter, explanation 3 and explanation 4 to section 90 was introduced. Both these explanations said that whenever a term is not defined in the particular treaty, then these terms can be defined through a notification issued by the central government. And the meaning as per this particular notification would be applicable. Explanation 3. Similarly, explanation 4 also says that whenever a term which is not defined in the particular treaty and subsequently defined in the Act, the Act definition will apply. The definition under the Income Tax Act would apply from the definition of treaty. From the date of entering into the treaty, not from the date of amendment. It said that from the date in which the treaty was entered into, from that date, these definitions will be applicable. So like this, certain decisions sought to be overruled through introduction of explanation 3 and explanation 4 to section 90, wherein certain terms which are not defined in the treaty came to be defined through a mechanism wherein the central government has to issue a notification under the Income Tax Act. Section 159, subsection 7 of the 2025 Act deals with the same topic. But it doesn't stop at the explanation 3 and 4. It goes one step further. What does 159, subsection 7 of the 2025 Act says? We have to explain this, we have to understand this sequentially. Number 1, it says that wherever if any definition is there in an agreement, double taxation agreement, that definition would apply. It recognizes the principle that the treaty definition would apply. This is the first stage. So first you need to look out for the definition of a particular term in the treaty. For example, the word royalty is defined in the term, is defined in treaty. You cannot fall back on the definition contained in section 916. And understand it expansively. The word royalty will carry the same meaning as defined in the treaties in a narrow manner. Unless and until there is a transfer of the copyright, it will not be regarded as a transfer of the, it will not be regarded as a payment made for the use of a royalty. Now, second stage comes is a stage where a particular term is not defined in the double taxation avoidance agreement, but the very same term is defined in the Income Tax Act of 2025. That is the second step. Now, in that connection, 159 subsection 7 says that treaty doesn't have the definition, no matter, but the Income Tax Act of 2025 has a definition. So therefore, the treaty terminology has to be used, has to be understood in the context of the very same word which is defined in the 2025 Act. Not only that, plus the explanation given by the central government with regard to the meaning of the term. So two things have to be noted. If a treaty doesn't define a term, then you need to fall back on the Act of 2025, see whether if it is defined in the 2020. If it is defined, that definition will apply, plus the explanation on that particular definition as may be given by the central government, that would also be applicable in understanding the word, that particular term. This is the second stage of understanding. Now, coming to the third stage. In the third stage of understanding, 159 subsection 7 says that if a particular term is not defined in the treaty, if a particular term is not defined in the act, then what to do? Then it says that these particular terms, which are neither defined in the treaty nor defined in the act, can be defined through a notification issued by the central government. It paves the way to issue a notification by the central government in which a particular term not defined in the treaty would be defined. This has an exception. What is the exception? Two exceptions are there. One, unless the context otherwise requires. First exception. Second, it should not be inconsistent with the provisions of the act or the treaty. Two exceptions have been embedded in 159 subsection 7. So third situation takes care of a case wherein a particular term is not defined in the treaty, not defined in the act. Then the notification can define that particular term, unless the context otherwise. If the context otherwise requires, even if the notification is issued, that notification definition will not be applicable. Or if the definition as given in the notification is inconsistent with the provisions of the treaty or the act, then also we can argue that notwithstanding the fact that a particular term is defined in the particular notification, that notification will not be applicable. We can argue. So two exceptions have been carved out. If two exceptions cannot be satisfied, what will happen? The meaning as given in the notification would apply. This is the third stage. Now 159 subsection 7 goes one step further to the fourth stage, which was not included in explanation 3 and 4. The fourth stage is a case where a particular term is not defined in the treaty, a particular term is not defined in the act. It is also not defined in a particular notification. Notification is not at all issued, let us say. Notification is also not issued. Then how to understand the term? 159 subsection 7 gives a indication saying that if that particular term is defined in any act of parliament, central government, if that particular term is defined in any act of central government relating to taxation laws, then that definition will be applicable. This is the fourth stage. For example, in customs law, in GST law, a particular term is defined. The same term is also used in the treaty, but that term is not defined in the treaty, not defined in the Income Tax Act of 2025. Notification is also not issued by the central government. Then you can see the allied laws, allied taxation laws, like GST law, customs law, and if that particular term is defined, then here also that exception is applicable. What is that? Unless the context otherwise requires. If the context otherwise requires, because customs law, GST law deals with a different purpose, it may not be having the same purpose as under the treaty. So we can always argue saying that the context otherwise requires, therefore you cannot import the definition of the same term as given in the allied taxation laws. But however, if the context doesn't otherwise requires, then what will happen? The 159 subsection 7 says that treaty term has to be understood in context with the allied taxation laws of the contracting state. Now, if it is not defined in the allied taxation laws, it also gives a way to find out what is the meaning of this term in any law of the central government. In any law of the central government. That is the last step, fifth step, wherein it says that a particular term is not defined in the treaty, not defined in the act, not defined in the notification issued also. And similarly, the allied taxation laws in the contracting state doesn't define this particular terminology. Then you are required to go and find out any law of the central government. Is the term defined? If it has similarity, then you can take that particular definition. The income tax authorities also are bound to take that particular definition and apply and understand it in the context of the treaty. If there is a similarity, but if the context otherwise requires, then it cannot be used. Now here, one important distinction has to be noted. When it comes to the fourth stage, what does it say? It says that you need to look into the definition of the term as given in any act of central government. The word act is used. When it comes to the last stage, it says that when it comes to, if a particular term is not defined in the central government act, you need to look into any other law of the central government. So act versus law. What is the difference between act and law? The word law is comprehensive of including acts, rules, bylaws, notifications, circulars, everything. The word law is a very wide word, whereas the word act is restricted to act of parliament. It has to test the, it has to get satisfied the test of the floor of the parliament. Only then it becomes the act. Act doesn't include this ordinance, whereas ordinance is included in the word law. So like this, a distinction has been made. When it comes to the fourth stage, you are only required to look into a central government act, central government legislation which has been passed in the parliament. If that particular term is defined, then yes. Unless the context otherwise requires, and if it is not inconsistent, you are required to apply this. Otherwise, if it is not defined in the central government law relating to taxation, then you can go into the other laws of central government. Any law, it can be bylaws, it can be rules, it can be any ordinance, anything it can be. So this is the distinction between the law and the act which has been embedded in section 159 subsection 7. In sum and substance, section 159 subsection 7 tries to interpret a particular term which is not defined in the treaty, basically. It gives various interpretative provisions which has to be applied sequentially. First, you need to see the treaty definition. If there is a treaty definition, no need to go through all these exercises. No need to go through all these provisions. If there is no treaty definition, look into the definition as given in the Income Tax Act of 2025. If there is no definition given in the Income Tax Act of 2025, then you need to look into the notification specifically issued under 159(7). If there is no notification, look into the allied tax laws. If there is no definition under the allied tax laws also, then you can apply the definition given in any law of the central government, be it an act, be it an ordinance, anything. This is the understanding of this section 159 subsection 7. They have included the 2017 OECD model. The 2017 OECD model also says the same thing. First, you need to look into the taxation laws of the contracting state. If there is no such contracting state definition, then you are required to go into the other allied laws of the contracting state. So same sentiment, similar meaning has been brought into the definition under section 159 subsection 7. There are two types of treaties. One, the treaties which India has entered into with USA, UK and all, where in Article 3, Subarticle 2, Article 3.2 generally says that wherever a term which is not defined in the treaty, you can look into the taxation law of the contracting state if that particular term is defined. The recent treaties which India has entered into with like Armenia, with Iran, with Chile and all, goes one step further. The treaty itself says that if a particular term is not defined in the treaty, you need to look into the definition of this particular term as defined in the local taxation law of the contracting state. If it is not defined, then you can adopt the definition as given in any other law of the contracting state. So the recent treaties also includes this expansive definition. The same sentiments, the same understanding has been included in section 159, subsection 7 of the Income Tax Act of 2025. When it comes to taxation of salary, profits in lieu of salary is also a salary. Section 17, subsection 3 of the 1961 Act defines the term salary. It had three limbs, 17.3, 1, 2 and 3. Now under 17.3 subsection clause 2, certain payments made by employer to employee like gratuity, commutation of pension, retrenchment compensation, these were all excluded from the ambit of taxation under the head profits in lieu of salary. Why it was excluded? Because there were corresponding exemption provisions in section 10. Section 10.10 dealt with gratuity, section 10.10a, the commutation of pension, 10.10AA, leave encashment. Because of the corresponding exemption provisions given in the section 10, these receipts given to these payments made to the employee were not forming part of the profits in lieu of salary. It was going outrightly as exemption. Now, under the 2025 Act, there is a drastic change. From exemption, they have shifted now this to deduction. This is the only change. What was earlier exempt, totally exempt from tax, although it was exempt, the employer was required to report these exempt receipts in form number 16, because your form number 16 specifically included a particular line item giving all the breakup of the exempt incomes. That remains the same. Now, instead of being exempt from tax, now it has been shifted to taxable. It has been made chargeable to tax with a corresponding deduction given in section 19 of the 2025 Act. What was earlier exempt has now become a deduction. That means under the definition of the profits in lieu of salary, these gratuity payments, these leave encashment, commutation of pension, retrenchment compensation, VRS receipts, all would be included within the ambit of the definition of the term profits in lieu of salary under the 2025 Act. You cannot treat it as exempt. Having included within the definition of the term profits in lieu of salary, section 19 of the 2025 Act, which is similar to section 16 of the 1961 Act, gives deduction. Earlier section 16 was limited only to profession tax and the standard deduction. Now, in addition to these two, the section 19 of the 2025 Act also includes various other receipts. There is a table of receipts which have been included. Like similar, what was, since it has been made chargeable to tax, these incomes also would be eligible for deduction under section 19. To begin with, the gratuity, leave encashment, all these things will become correspondingly eligible for deduction under the 2025 Act. I have discussed the changes, the major changes between the 61 Act and the 2025 Act. These are the main changes which I could relate. Now, we'll just run through the PPT. Section 2 subsection 34 and 2 subsection 9 defines the term previous year and assessment year. In that place, tax year, this has already been discussed. When it comes to 2 subsection 31, the definition of the person, it also had an explanation. Now, this explanation has been converted to a specific subsection. That is the only change. Inclusive definition of the term income under section 2 subsection 24. Now it has been broadened under section 2 subsection 49. This has also discussed saying that various export incentives, export related payments, profits from transfer of the DEPB license and all are specifically included in the definition of the term income under section 249. 243 defines the term tax. 2106 of the 2025 Act defines the term tax to mean income tax chargeable under this Act. The word total income remains the same. There is no change. Definition of business in subsection 2, subsection 13, profession and amalgamation remains the same. There is no change as such. Now, demerger, section 2, subsection 19AA had defined the term demerger with various explanations, provisos. Now, all these explanations and provisos has been created through a separate clauses or subclauses or specific subsections. That is the only change. Otherwise, there is no change in the character of the definition. 229BA defines the term manufacture with its grammatical variations. Now, 2 subsection 69 says that with its grammatical variations and cognate expressions. Definition of capital asset 2 subsection 14 of the 1961 Act has explanations clarifying certain terms. It said that whenever you create an interest, whenever you dispose of or part with an asset, that would also be regarded as transfer through an explanation. Now that explanation has been converted into clauses and a table has been introduced for the agricultural land limits. 2 subsection 47, the definition of transfer, again a inclusive definition with specific 6 clauses, same 6 clauses, it has been in a different manner under the section 2 subsection 109 of the 2025 Act. The word immovable property is defined in the very same section. This is the only change. Earlier, it had referred to the definition of immovable property as contained in section 269 UA, whereas in the current section 109 definition of the word transfer, the word immovable property is defined in the very same subsection 2, subsection 109. That is the only change. 2 subsection 42A defines the term short-term capital asset with various explanations defining specific situations. What happens in the case of liquidation of the company? What happens in the case of amalgamation? Should I consider the period of holding of the asset in the amalgamating company or not? All these specific explanations have been converted into specific clauses. That is the only change. House property assets, there is no change. Dividend, similarly, explanations have been converted to specific clauses. No definition in the definition of the term. Assessee, assessing officer, the difference between assessment, this definition we have already discussed. The word assessment includes reassessment, whereas under the 2025 Act, the word assessment includes reassessment and recomputation. Now, these are the new definitions which are added in section 2 of the 2025 Act. Number 1, 2 subsection 1, accountant, as I said earlier, which has reference to section 515(3)(b). Under the 1961 Act, section 288 also had specific explanation which defined who is an accountant, a chartered accountant who has a valid certificate of practice and blah blah. It also created various limitations to act as an accountant. Those things have been borrowed. Those things have been included in section 515(3)(b). Convertible foreign exchange is specifically defined in section 2 subsection 30. It was also defined in various sections. For example, section 10A, 10AA also had defined what is convertible foreign exchange. Now that definition has been put into section 2 subsection 30. The word currency and Indian currency has been specifically defined, which takes the same meaning as per the FEMA. International Financial Services Center, non-banking financial company, these are all specifically defined. The term senior citizen was defined at least in 3 to 4 places in the 1961 Act. Now that definition has been shifted to section 2 subsection 100 of the 2025 Act. Books of account we have already seen, charitable purpose we have already seen, and the relative definition, wherein the lineal ascendant or descendant either from maternal side or from paternal side, both sides are included. Yes. Under the 2025 Act also there are 2 definitions. Under the 1961 Act there was 4 definitions. One under section 241, section 13, 48(2)(b) and 56(2)(10). Under the 2025 Act I could make out at least 2 definitions. I have to study in depth. I'm not very sure about more than 2 are there or not, but it's at least I could see the 2 definitions. One under section 2, another under section that is 56(2)(10) wala definitions. With this, I have concluded. Thank you very much. If you have any questions, I'm free to take it. Thank you, friends. Please. Yes, sir. Yes, sir. Earlier,
yeah, in case of slump sale, earlier they had a reference for transfer. Correct. In new definition, that reference is not made.
Not made. Because it is already defined in section 2, right? Yeah. That is the whole purpose. The 1961 Act had defined the word slump sale. Earlier it was through sale of one or more industrial undertaking. Where again the decisions came saying that if there is an exchange of the undertakings, it won't fall within the slump sale. To overrule that particular decisions, instead of the word sale, they introduced the term transfer. Then again, what is transfer was also defined. Okay. Now, in the 2025 Act, what they have done, they have not defined any specific term of the word transfer. They have one, because section 2 is the default chapter wherein all the definitions are there. So those definitions apply even in the context of section 2 subsection 42. That is the understanding. There was no need of a specific definition under section 2 subsection 42. Otherwise it leads to multiplicity. They have avoided multiplicity. Sorry, sir. Indexation is not there, sir, now. Under the 1961 Act itself.
No, in 2025 Act,
yes, sir.
Capital gains, indexation, immovable property, all those things are continuing.
Yes, sir. So, indexation is not there.
No, we had this amendment in 2024, where for immovable property, the indexation up to such and such a date was allowable.
Applicable only for residents, that too at the stage of computation of tax.
Yeah, so same thing is continuing this.
But I have to see, sir, because I have prepared only for this definitions chapter.
Okay.
I have not prepared for this entire capital gains and all.
Hello, sir.
No, I think the intention is very clear. They want to include it in the tax base. Earlier also it was, the audit trail was available with the income tax department because that had to be disclosed in form number 16. That was also available.
Yes, sir.
But the intention is very clear to bring it within the ambit of tax and thereafter to give the deduction, thereby making the employers as responsible to compute these deductions properly. Earlier also, the employers were responsible. I'm not saying that they could have given any exemption of whatever nature. Now it has become more, you can say, more obligatory, more responsibility has been cast on the employers.
Thank you, sir.
Excuse me. Sir, now the definition of other general public utility for charitable, the 20% of business that is taken out. So for medical relief, there is no such condition. Suppose they get small receipts for doing treatments and they share the data with companies. So they get some donations in form of donations, not exactly donation. So that will be still a charitable activity under new definition?
Sir, firstly, this 20% criteria is applicable only for object of general public utility. It is not applicable for the other limbs like education, medical relief, all those things. That is the first point.
Okay.
Now, coming to your question, you are into an activity of medical relief, you said.
Yeah.
You also said that you are sharing certain information with certain agencies for which you are getting a receipt.
Yeah.
And also you are saying that in the form of a donation. So your statement is contrary actually. Because if you are sharing certain information, any receipt which you are getting cannot be treated as a donation. It is a consideration for sharing that particular information.
Yeah, but in the course of giving the relief, because you do treatments for various public without any consideration or taking some small receipt of 10 rupees, 20 rupees.
No, if that receipts are connected with the medical relief, it is for the purpose of medical relief, definitely 20% criteria will not apply.
Okay, okay.
Because it is outside the ambit of 20%. But your pointed question was, you are sharing some information to outside agencies for which you are getting receipts.
Yeah.
According to me, it is not a donation at all. It is a quid pro quo. What you are getting money is for sharing the information which can be called upon as a object of, I don't know. Where is the object of general public utility in this?
Okay.
There is no object of general public utility in this. Because
So
we are
it can fall under medical relief itself?
doubtful, sir. According to me, it is doubtful. Unless and until you are able to link it with the medical relief. Why is it, how can it be related to medical relief? As an assessing officer, I will ask, how is it related to medical relief?
Okay, okay,
You are sharing some information for which you are getting the receipt.
okay.
So this is a pure consideration for doing an activity in the course of trade, commerce or business.
Okay, okay, sir.
I will treat it as a business income itself.
Okay. No, but that same is utilized for free service.
Utilization is not relevant, sir. Under the 1961 Act also, under the 2025 Act also, utilization is not at all relevant. You need to see the nature of the receipt. If the nature of the receipt is such of a commercial in nature, under the 2025 Act, commercial activities are prohibited by a registered NPO.
Okay, okay, okay. Thank you, sir.
Under the under section 20, under section 19, the exemption for gratuity seems to be 50% of the salary and not 15 by 26. So does it mean that 15 by 26 minus 50% will get taxed in the hands of the employee?
Sir, I have to see, sir. I have not looked into the actual, the computation of the deduction under the head section, and under the head salaries, section 19, I have not looked into the definition. I only compared the 61 Act with the definition with the 2025 Act.
Excuse me, sir. For a demerger definition, they have covered section 232 to 232 of the Companies Act. 233 is specifically excluded. What is your view? Fast track demerger is.
There is a view that this fast track demerger through regional director may not qualify as a demerger under the company law at all. There is a view. Because unless and until the demerger is sanctioned by a NCLT, it may not satisfy the test of demerger at all. There is a view possible. But the other view is also says that if that is the case, why have they provided for the regional director route? The fact that they have provided for the regional director route, it means it is legally permissible. If it is legally permissible, nothing prohibits me from taking recourse to that and claiming exemption. Both the views available.
Thank you.
Thank you, sir, for the wonderful session. On behalf of Bangalore branch of ICA, I, Chandra Prakash, Managing Committee member, present a token of appreciation. Present a moment of a token of appreciation. Thank you, members, for patient hearing. And in the series, next Wednesday we have a session on income tax, and next Saturday we have a session. We'll break for tea, and today close, the day close. Yeah, thank you.
Global Capability Center Summit 5.0 held at Nana Jyoti Auditorium. We request you all to kindly participate for the same. Thank you.